We just have a quick question here from Marlo asking, what exactly is the BTP Bund spread and what is its relationship to the euro? So thanks for the question, Marlo. So as you know, a spread in this scenario simply refers to the difference between two countries' bonds. So in the case of the BTP Bund spread, like we have on the screen here, it's simply the difference in the bond yield between the Italian 10-year bond yield called BTPs and the German 10-year bond yield called Bunds. So if the yields on Italian 10 years is sitting at 2% and the yield on a 10-year Bund is sitting at 1%, then the BTP Bund spread will be 1%. So why is the spread significant and what is the impact that has on the euro? Now, when you look at the country composition of the Eurozone, Germany is by far one of the safest in terms of economic health and well-being, and is considered to be one of the most stable countries in the Eurozone economically and politically. So when it comes to bonds and investing in bonds, one of the safest bonds that you can buy in the Eurozone is a German Bund. So when we compare that with a country like Italy, which has had lots of debt issues for quite a long time, the market is essentially using the spread between those two yields to measure the risk of buying Italian bonds over that of German Bunds. So remember that bonds of governments or companies that has a higher risk or a higher possibility of default has to pay higher yields to attract investors to buy them. So that's why countries like Italy will often sell dollar-denominated bonds instead of euro-denominated bonds, because even though their payback from a euro-denominated debt would be cheaper, they issue them in dollars. Even though they might pay more, they issue them in dollars in order to boost the attractiveness of those bonds. So when things go really bad in Italy and the market, worries about rising default risks, you'll often see Italian yields will rise, just like yields will rise in like a emerging market economies bond yields when there's, any type of concern politically or economically, etc. So coming back then to the BTP Bund spread, by comparing the difference then between that riskier bond on the Italian side and the more stable bond on the German side, the spread really acts as a type of risk premium on the euro. So when uncertainty increases in the Eurozone, economically or politically, more specifically in Italy, of course, in this case, you'll see a rise in that spread, which from a risk point of view should have an inverse reaction on the euro. So when we had that recent political uncertainty kicking in from Italy, starting to ramp up, we actually saw that the spread moving higher by quite a bit in the short term. And that was just because that political uncertainty was starting to rise, which means that the Italian yield started to rise a lot faster than German bonds or Bunds. So if we go to the charts, let's just pop in the EXY. The EXY is simply just the euro currency index. I think it's better to compare it from a euro point of view than just looking at something like the euro dollar. Now, going to the charts, that means that whenever we see that spread moving higher, that should see pressure, theoretically speaking, on the euro. And whenever we see that spread moving lower, that should be more supportive for the euro, theoretically speaking. But of course, like any correlation, it's not perfect. And, always keep in mind that a correlation does not necessarily always mean causation, which means that if the spread moves up, it does not always lead to euro weakness. And every time that the spread moves lower, it doesn't always lead to euro strength. There can, of course, at any given time be any other idiosyncratic drivers moving the euro at that given time, which might have nothing to do with the spread at all. But the general idea is that as it's seen as a type of risk premium, whenever that risk premium rises, that should add pressure on the euro. Whenever you see that calming down, that should, of course, add some supportive price action for the euro. That's why when we had the release, the announcements coming out about that recovery fund back in May 2020, we saw a massive reduction in the spread, a massive reduction in the risk, essentially, of investing in the Eurozone. And that, of course, led to quite a lot of appreciation in the euro. And we've basically just seen that spread continue to press lower, not only on the back of the recovery fund, but also on the back of the PEP program from the ECB, where they've basically been disproportionately buying bonds from the struggling countries in terms of Italy and Spain, etc., to basically try and offset some of that debt concerns. And as that spread has obviously continued to push lower, we've seen a continued push to the upside for the Eurozone as that spread has continued to narrow and press to the downside. So hope that helps with the question, Marlo. Any others, please don't hesitate to let us know.